All right, back to work. Party's over, back to work. We got some work to do here tonight, guys. It's about that time of day again here, isn't it, folks? It's Wednesday evening. It is February the 13th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders of all shapes and sizes, rookie traders, experienced traders, all kinds of different types of traders I've worked with in my career, helping them find predictable, reliable, dependable opportunities every day in our trade room using a simple three-step trading strategy. And my goal tonight is to identify the most reliable, most dependable opportunities setting up for tomorrow, Thursday morning's trading session. And tonight we're going to cover crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to jump in first to this evening on oil. There are three big clues on oil right now, but really the most important information is we have a nice big bull run into a trading range on the oil market. Now, anytime I see a bull market into a trading range, we call these a spike and range, and it tells me I want to look for buying opportunities down below the low of that range. Now, that should be pretty easy, but we got one big problem. We've got this big trend line coming down overhead. So I want to be a buyer down here, but I've got to plan my way around that falling resistance trend line. I've also got a big hidden channel coming up off the bottom, which I think the combination of that trend line along with that channel might just bring us the best trades tomorrow morning to go back up to retest that high. I'm going to dig into that oil market here in a lot more detail in just a few moments. Over on the Emini S&P here tonight, S&P is in a very similar position. We have another big bull run up on the S&P, but now you'll notice we're starting to see some falling resistance. We're starting to see some rising support. Moving average start to flatten out. Very similar to what we saw on the oil market, right? Strong move up into that trading range, which tells me I want to be a buyer down below the low of that trading range, but much like the S&P or much like the oil market, I've got that falling resistance trend line, and that's going to be a very big factor for tomorrow's trading session, because not only does that require me to look for very specific types of entries below the range, but I'll tell you, oftentimes this leads to big collapses, and so we're going to put that plan together here in a moment on how to buy it, but also what to look for if this thing collapses so we can make some money on both sides of that market tomorrow morning. Over on the Nasdaq appears to be playing with cards up right now. It looks like we've started to peel back off of that high. Nasdaq, much like the oil and the E-minis, nice strong run up into that trading range, but now you can see the buyers have tried once, they've tried twice, and sellers were waiting overhead here, right, to clobber them going back down. So that gives the bears the momentum they need right now to try to go back down to that big round number at 7,000. And I want to look for a couple different opportunities to sell up inside that battle zone, combining three different levels of resistance. I've got four different entry patterns I'm going to be watching around that battle zone. We're going to break that down for you guys in just a moment. Over on the gold here tonight, the yellow metal, loving on this gold right now. Gold continues to perform here in the month of February. Now, last night we had that big triangle on the chart, and so we were focused on selling high, buying low, selling high, and now I'd like to buy low and bring this market back up into that trading range, but there's one big problem on this chart, and that is momentum. The strength of this move going lower is just insane. I can't even think about being a buyer on this market until I see two big clues, and we're going to go over those two clues in just a moment here after we finish up the introduction. And of course, over on the euro, euro's back to being a bear again. We were kind of joking around about this last night on the newsletter, this big bounce right off of that low. Here we are now. We're back down to the right. We're back in the bear's hands again. A beautiful 1, 2, 3 reversal into that hidden channel pullback. If you were watching last night's newsletter, you were ready to profit off that sell. But that's behind us. And so now I'm trying to find my next opportunity here to sell this euro market. But I'll tell you right now, there are two big reasons, two support levels down here that I'm really worried about selling into. So I don't want to sell too low here on this euro. I want to get it up and then try to rope in those buyers and just run them back down again tomorrow. I'm going to show you 3, maybe 4 different patterns we can look for to sell up around that battle zone here for tomorrow. So I got plenty of opportunities setting up for Thursday's trading session. But before we jump into those charts, though, I want to make sure you never miss another newsletter. And to do that, I would always recommend you join our mailing list. All I need is your name and your email address, and then hit that subscribe now button. Head over to the blog at Sideways Markets. I'll put all the links in the description of this video right now. Head over to our blog, join our mailing list. All I need is your name, your email address, hit that subscribe now button, and I'll make sure I send you an email every time I publish something new. And make sure when you subscribe to our list that you check your inbox, because I'm going to send you a welcome email with lots of great goodies so you can get the most out of your time with us here at School of Trade. And also don't forget to, tomorrow morning we'll be in our trade room at 8 o'clock Eastern time like we are every morning. I'd love to have you there with me. If you can't be there with me tomorrow morning, the next best thing would be is to download all the same charts that you see me using tonight on the video. You can download the same charts that I'll be using tomorrow by following that link right below the video tonight on our blog here at Sideways Markets, or again, it's in the description of that YouTube video. And how about some questions, comments, concerns, feedback, any ideas you want me to cover in my next video? That's what the comments section is for. If you have any questions about the strategy, questions about getting started as a client, or any questions in between, drop them in the comments section below. And also don't forget too, you can always use that live support tool in the upper right hand corner. Call that toll-free phone number. Hit me up on that live support tool. I'm always there to help out as well. All right, it is great to be back here with you guys and gals tonight. Don't forget, this is my final newsletter of the week. I will be out of the office tomorrow afternoon. Not to worry though, if you're a member of mine, we'll be in the trade room, of course, tomorrow morning, like always. But again, unfortunately, no afternoon, no newsletter tomorrow night. I've got to be out of the office tomorrow, right, in the afternoon. So please be aware of that. I always hate to leave you guys hanging, but sometimes, right, sometimes life calls and you got to take care of business. Jumping into tomorrow's Thursday, February the 4th. What do we have here on the schedule? Well, first of all, if you're trading in the overnight session, we do have some pretty big news coming out of Europe here overnight. We get the GDP number at 650, and of course that merchandise trade number from China at 10 o'clock Eastern time. So probably not going to be a real sleepy overnight session if you're in Asia or you're in London, or maybe you're just a night owl, right? Like a lot of traders are. Keep your eyes open overnight. There may be some definite opportunities here in the wee hours of the morning. That'll give you a chance to ride the momentum we see off that GDP report and that merchandise trade balance at 10 o'clock Eastern time. As far as news goes tomorrow, there's quite a bit of news, but it's really all piled into really two specific locations. First of all, you've got your Eurozone Gdp tomorrow. That will likely be a big market moving event if you're trading the London session tomorrow morning before we open up in the US session, right? 5 o'clock Eastern time is that GDP number for all your Eurozone traders. But really tomorrow, the meat and potatoes of tomorrow's trading session, we've got jobless claims, PPI, and of course those retail sales numbers tomorrow morning all coming out at 8:30. That should light the fuse here tomorrow morning and really get these markets moving for us. So I'm looking forward to a great session tomorrow morning. We'll be in our trade room 8 o'clock Eastern time. We know what our schedule looks like tomorrow. There was this holiday tomorrow, too. I can't recall. It's on the tip of my tongue right now. February 14th. I always forget. These random holidays, right? I wish somebody was around to let me know what tomorrow was. There is a holiday tomorrow in the U.S. It just slipped my mind completely. Maybe you can help me out, right? And drop me a comment in the comment section. Remind me, what is that holiday for tomorrow? I can't recall. Anyways, there is a holiday tomorrow, but I don't think it's going to affect our markets, right? That we're trading tomorrow morning. So let's just jump right in and get into those charts here this evening. So we're looking great there. News is under control. Let's grab some charts and let's get this plan put together here for us. Looking good. Jumping in first on oil, we'll go over all the big clues on each of these markets. Please don't forget, as we mentioned earlier this week, we are watching contract rollover right now. If I grab this market analyzer here for NinjaTrader, you'll notice here, give me 1 second here, guys. If I grab that market analyzer here right? And you'll notice here, right, we are watching that rollover right now between that 319 and that 419 contract right now. They're not quite there yet. I don't think tomorrow will be the rollover, but we do have that potential for rollover coming probably on Friday, if not Friday, the following Monday. So be aware that rollover is definitely on our radar right now, right, when it comes to oil. So on the 319 contracts right now, the 419 contract will definitely be something we're watching as we go into the end of the week. So outside of contract rollover, there are really three big clues on this chart right now. The first big clue is this strong bull move higher. That gives the bulls the momentum or the control of this market. Now, anytime I know the bulls have control or anytime I know the bulls have the momentum in the market, I want to find levels of support, right, that I can use to buy with. Now, where could I find levels of support? Well, let's talk about the trading range. The trading range is the second big clue on this chart. You'll notice here we have a double top in price. That double top, as we go up, pull back, double top and pull back, as I always remind you guys, that creates the trading range. Once I know I have a trading range, I can take the size of that trading range, copy and paste the size down, and that creates a key level of support at 53.71. Now, at the same time, I can also find a big hidden channel back here, and that also lines up, right, with a level of support down there. So I really like the fact this trading range gives me a level of support that is lined up with, right, that if I zoom all the way out here a little bit, right, you can really see here this kind of hidden channel I've drawn on, right? Mark up those highs, mark up those lows, and you can see where that trading range, that range expansion level that is, lines up nicely with the low of that hidden channel. So again, it's a bull market, at least for now. It's a bull market right now. The market has that bullish momentum to it. So with that bullish momentum, I know I want to buy at support. And of course, I'll use that trading range and combine that with that low of that, right, the low of that hidden channel for a nice key support area there. But there's one big clue here that is really the elephant in the room, if you will, and that is this falling resistance trend line. Now, falling resistance trend lines, they mean a lot to me as a technical trader because, first of all, they prevent me from wanting to buy into them, and they also provide for excellent levels of support when I use them on the opposite side. So the big thing right now is I would normally be looking for a 1-2 try failure, but this is not a great spot to be buying right now, not into that falling resistance. What I'd rather do is get over it and use it as a key level of support. So we're bullish. I want to buy at support. Trading range gives me levels of support down in that battle zone, and that falling resistance, I want to try to use it not as resistance, but as support. So here are a couple different patterns that I'm looking for tomorrow, and of course we'll do this together tomorrow in our trade room. I'm assuming based on this falling resistance that we're going to see the market pull back here. Now, once we see that market pull back, this is going to give a little bit more momentum to those bears. So what I'm trying to do is I'm going to try to catch those bears, right, trying to get too aggressive. I'm sure if we make one more leg lower here, you're going to see sellers trying to sell into it. Now, they might be successful, and we'll put together that plan here together in just a moment. But the most important thing, though, is while we're bullish, I'll let those sellers try to sell into it. Then I want to get back above it, pull back, and use that trend line. Now, what this is going to do is it's going to give me what I call the nested 2-try failure. Follow the bouncing ball here. The sellers will try once to go lower. I'll let them try a second time to go lower. And then once I see them try twice, that should put me on the other side of that, right, of that trend line. And I'll look for that buy going right back up into that trading range. Now, another variation of that nested 2-try would be something like this. Maybe we pull back, right? We go up, we go over, and we get the buy from there. That would also allow me with what I call a major 2-try, right? Called 2-try failure pattern. One's a nested. This will be called a major. Major because it's much larger, right? Same basic idea. Trying to use that trend line as that key level of support. And then, of course, from there, what I like to do is let's say, for example, we get that 1, that 2, that nested. Boy, would I love to be able to incorporate the low of this hidden channel along with that range expansion level. So that would really be a nice area there. If I can get that buy now going higher, what I can then do is go out, and again, I've got that buy off the trend line. I can also look to buy right into stops using a failure setup off of that swing. And then if I can get lucky and get that pullback, I can look for a pullback pattern as we go back up into that trading range. So there are 3, maybe even 4 different ways to get into this. Again, it's the nested with the 1, the 2 back up, right? It's the failure going above the high and the pullback, right? Pulling back to that entry point right around that 54 even. Now, I want to talk a lot more about all of these entry patterns, but I want to also give you a great free resource to learn more about all my favorite entry patterns, including these 1, 2 try failures, including these pullback setups and everything in between. And to do that, what I'll do is I'll drop a free trading class in the upper right-hand corner of this video. You'll see a link pop up there right on the YouTube channel. If you're not on YouTube right now, there's also a big red button right below the video tonight on our blog. Either one of those will work. Hit that big red button below the video or grab that free course link in the upper right-hand corner and join the free trading class. That way you can learn all about the entry patterns, like, for example, this nested 1, 2 try failure that I'm gonna be looking for here right tomorrow morning. Now, what if we go all the way back into that range? Then what do we do? Well, the market's bullish at that point. Trading ranges tell me to buy low and sell high. There are 2 scenarios I'm looking for as we go back higher. Now, going back higher, of course, again, the market is bullish, so I don't want to be too aggressive trying to sell this market. If the market does just jump as we go higher here, watch for 1, 2 swings from those buyers. 1, 2, if I get those buyers now trying once, trying twice, now I can sell right into those stops and take it back down into that trading range. Just promise me you're not going to get too aggressive trying to sell off that high. Let them go up, let them try once to keep it going, twice to keep it going. See, most buyers are not going to try a third time. Once they see it first, second, they're going to give up, and I'll be right there with them to sell back down into that trading range. Another thing I'm looking for, though, is because the market's bullish, is if we do see it really run higher here, is look for a spike in channel. Oftentimes, these markets that really run going with that overall momentum, they create these little spikes into these channels. What I'll do is I'm going to mark up that high, right, the initial push higher, mark that low and look for that buy off the low of that channel. We talked about this earlier on that euro. That is a fantastic buy. Again, if we can get that real strong momentum pushing higher. But be very careful buying until we see proof, right? And proof, I mean 1, 2, 3, right? Really get that proof going higher, mark up that high, mark up that new channel, and then of course we'll watch for that pullback to find the buy off the low of that channel. A remarkably reliable pattern, and I'll point that out to you here on the euro a little bit later on in this video. Now, we've talked about buy sides here so far, a little bit of sell side. How would this market turn bearish? Because after all, anytime I see a falling resistance trend line, I already know that sellers could easily get this thing to turn bearish. So what would that look like? Well, it requires what I call a 1, 2, 3 reversal. Now, a 1, 2, 3 reversal is a very clever name, right, for what I look for when a market reverses. For example, we already have a strong move down. If I can see a pullback to the moving average and another strong move through, the key word here is very strong move off of that moving average. Well, now what I can do is I can line up those lows, I can project off that high, and I can look to sell off of that high, right, using that level as resistance. Same basic idea as we talked about out right up around those highs just a few moments ago. So again, what you don't want to do though is you don't want to try selling here just yet because you've got those stacked up levels of support. I don't want to get too aggressive trying to sell just yet. So wait for it 1, 2, 3, and then find that new channel and we'll sell off the high of that channel. And again, we'll put all this together tomorrow morning in our trade room just so you know exactly what the plan is. So let's keep going. Oil looks good. How about some S&P 500? Over on the S&P, we can easily see here 3 big clues. First clue is this bullish momentum. What does a bullish momentum tell me to do? It tells me to buy at support. Where could I find levels of support right now on the S&P? How about we use that trading range? If I take the range, and I think that range looks pretty good there from 55 down to 49 there. That looks like that's going to be our range. It's obviously a triangle as well, but anytime you have a triangle, there will usually always be some sort of rectangle in there as well. I'm going to call that my trading range because you'll notice if I project that range higher, oh, look at that, right? Hits that level of resistance. If I project that range lower now, bingo. Now it gives me that key level of support at 27.43. So I want to be a buyer because we're bullish. I also want to be a buyer at support, and I can use that pendulum swing, or as I say, right, those range expansions, right, the size of that trading range, copy and paste it down, right? That creates a great level of support as well. Now, the third clue is very similar to the oil market, and that is we have that falling resistance trend line. Now, what does that falling resistance trend line really tell me as a trader? Well, first of all, it tells me buyers are going to have a hard time getting through that area. What that means is this market will likely pull back much lower here. Now, as it pulls back going lower, this will look very, very bearish. It's going to feel bearish. It's going to feel very, very strong to the downside. And just like we talked about on oil, the best way to overcome that momentum going lower in an overall bull market is to wait for one specific type of failure pattern, and that is that 2-try failure, specifically that nested 2-try. Let those bears try once, let them try twice. Once those bears try twice here, once and twice, I can now look for that rally going higher. I definitely want to make sure I take some profit off at the top of that range, around that falling level of resistance. Then, of course, the final objective is a retest of that range high. So that's the plan I'm looking for here tomorrow. I'd like to see this thing again. I don't think you're going to see a lot of buyers who will try to buy this close to that resistance trend line. Usually when a trend line is that flat, it's usually very difficult for traders to get through it. And so price will usually pull back, and it can have a very sharp pullback. Because of that sharpness, because of that overall momentum, I'm not going to want to just buy it because the chances are pretty high it'll go right up and back down again, right? I don't want to make that mistake. So what I'm going to do is I'm going to wait for those sellers try once, try twice, and then we'll look for that rally going back up to retest that high. But that also leads me into my next point, which is how would this market reverse? We could easily reverse here. With that falling level of resistance, nobody wants to buy into that level of resistance. What do? Right? They back off, they sit on hands, and without those buyers in the market, the price has the potential to collapse. Now, we talked about this a few moments ago. It's that 1, 2, 3 reversal. So just a strong move down is definitely not enough. I want to see a pullback to the moving average. I want to see those sellers show up, really show up, and show me those bears want this. Okay, it's very, very common for it to go down, pull back to the moving average, struggle here a couple times, and then, of course, guys like me are looking for those bears trying once, trying twice, and again, it's because of that momentum. We have to wait for the once, twice, and then we can try to go back up from there. If the sellers can hold it, strong move down. If they can hold this pullback now and really run, now we're talking. Now I can grab that low, I can create that channel, and I can find that sweet spot right off that low and look for those sells right off that sweet spot. That's always where I look for those trades after we see the market reverse. And then where would a good target be here? At this point in the day, I would say we're probably going to be somewhere down around that 27.35 area. I mean, it's been such a big move here. Again, I would imagine the easy target for those sellers will be around that 27.35 area, which is, as you can see here, right, about halfway right up the ladder there. That should be a relatively easy objective for those bears. And then, of course, we'll see how far we go tomorrow morning in that trade room. Another thing I want to remind you too, right? Another thing too is if we do make it back up overhead, right? If we do go lower and we see the 1, the 2, and the run higher, is there any buying that we could do up here? Is there anything we could use up here? We definitely can. If we go higher here, again, let's just assume for a moment we get the 1, the 2, and we run higher here, right? We'll assume we go up. At this point now, there's only 2 scenarios I'm looking for, and it was almost identical. We talked about on oil, right? I can sell off this high if I can get the 1, the 2 back down again, right? Almost the same exact pattern. Again, we're buying off the low with that because that momentum will be so strong. We're selling off the high with that because the long-term trend is bullish, and I don't want to sell in an overall bull market. So if you want to be a seller off of that high, let those buyers try once, let them try twice, and then again, we'll walk ourselves. We'll do this together tomorrow, obviously, but we'll try to sell off the high of that trading range. And then again, much like on oil, if we can see a 1, 2, 3 pushing right through those highs, we keep hearing from Beijing about trade talks. We keep hearing about the government shutdown negotiations, the border wall, et cetera, et cetera. Who knows, right? Tomorrow could be another really big day, right? Especially with that big block of news tomorrow, retail sales, things like that at 8:30. So it could easily be a big day tomorrow, right? If it pushes higher, find that new channel. And again, we'll try to buy off the low of that channel. So keep it simple, right? I'm not trying to be a hero up here. I'm not trying to predict this breakout. I'm trying to stay patient. I'm trying to be disciplined to buy at support as it pulls back. So again, a couple options here, guys, for both buyers and sellers. And again, I've talked about a lot of different types of patterns here. If you want a much deeper dive into all the entry patterns that I love and use every day in our trade room, grab that free course in the upper right hand corner, or grab that free course by following that big red button right below the video tonight on our blog. All right, let's keep going. You got it covered here on the S&P. How about some Nasdaq here? Nasdaq's starting to show more, and this might be a little bit of a leading indicator for what's happening tomorrow on the Emini S&P. I've got 3 big clues on the Nasdaq here tonight. One is that bear momentum. This is a very, very big clue here on this Nasdaq. Big, strong move up, right? Kind of follow how the ball bounces here, right? Strong move up. We pull back and double top. Anytime we see a double top, we know we have a range. So we mark up the range. What do we want to do at the low of that range? We want to buy. We want to use the 1, the 2, the failure, right? Go back up. Well, as you can see here, the buyers were unable to retest that high. So what happens? Price collapses. Well, buyers, they're going to try at least twice. So look again, they try it again. 1, 2, failure. And again, they fail to go back and retest the high. Now, you tell me, guys and gals, if you tried once to do it and tried twice to do it, would you try a third time? Probably not, right? Neither would I. And that's exactly what's happened, right? Big run up. Buyers try once to retest the high. They try twice to retest the high. Now they're going, hell with this. I'm out of this sucker. And it collapses, right? That big red candle, those big series of red candles, right? And a beautiful setup here. Once, twice, failure back down. Wise traders were waiting to put the kibosh to those buyers and sell this thing back down again. So the bottom line is that's how the buyers tried twice, and now they failed, and this momentum shifts. Now that we have a bearish momentum in the market, now what's the plan? I want to sell at resistance. Now, where could I find levels of resistance? Well, remember that trading range, right? That trading range now becomes a key level of resistance. That's a great spot to be a seller. Or how about this one? How about we line up these lows, bring it up to that high, and even more importantly now, I'm going to try to do this. I'm going to try to go low to low here. Let's do it this way too. Let's go low to low here. up to those highs now, right? And now this kind of adjusts now. See if I can't get my drawing skills here. Bob Ross will be proud of me, I'm sure. Adjusting on the fly, right? Okay, so now we've got again, I don't mean to confuse you here on this, right? But now, right, that low to low, that brings me now another channel, and that's a great spot now that I can be a seller at. Right? So I get the low of that range, right? The high of that channel. That's my second clue, as you can see, right? Is that bear channel. But again, this might not be, this channel right here may not be the same channel very long. What may happen is we may see that channel here, right? We may see this thing dump, and if it dumps lower, we'll keep that channel going lower, right? So that channel is going to be a little bit of a moving target. We'll obviously do it together tomorrow in the trade room. The third big clue is, where would these sellers be trying to go? Probably back to that round number at 7,000. You know, anytime you see that many zeros, that's always going to be an easy pit stop for us as we go lower. And much like the S&P, if I had to guess here, right, I would say probably going to be something like, you know, halfway back, somewhere around that 69, 79, 69, 78, right, area as we go lower. So I am expecting that big round number to be a magnet, but I would imagine somewhere about halfway down the ladder is probably where, right, the easy money will be for those sellers. Who knows? Maybe we get a full-blown collapse here and we're back down to 68.50 here, right, by the end of the day tomorrow. I wouldn't start guaranteeing that just yet. So we know we're bearish. We know we want to sell at resistance. I've got a lot of really great ideas here right now, right, to sell at resistance. So let's call it, right, let's find that channel. Let's use the underbelly of that range, right? Let's get these levels all lined up here, because that looks like a great spot for me to want to be a sell. Okay, then if the market goes lower, we'll put together a plan for that. And of course, who knows, we'll put together a plan for the buy side as well. All right, so first things first here, what if we get exactly what I want? What I want tomorrow is I want this thing to pull back here for us, right? I'm hoping we don't just keep collapsing here. I'd like to see these buyers try a third time, once, twice. I'd love to see them try a third time. If I can get these buyers to go up and try again, then what that will do is that'll bring me into that moving average, and now we can really have some fun. We can look for that 1, 2 try failure. That will set up for the first opportunity. Very, very similar, right, to what happened here. We'll look for it again right there, right? 1, 2, back down again. That will give me my 2 try failure setup for the first entry. But then don't forget, a lot of times this will pull right back and we can sell it again off of pretty much the exact same location for the original entry, right? On the move lower. And then as we go lower, don't forget, don't chase these moves lower. If for some reason you can't get in on those, right, at those highs, focus on those traps and sell high from there. So there are 3 easy patterns I'm looking for here as we try to go up. Let those buyers, right, let them try once. Let them try twice. Let them try to buy the pullback to that moving average. It's not a bull market anymore, which means the pullback's not going to be very reliable, and we'll be waiting there to sell right into their failure. Now, once we get that failure, usually this gives me about a 1-to-1, right? A 1-to-1 first target. Usually pretty reliable. Once we get that first target, then we'll look for that next pullback, usually right back around that point of entry. I call this a breakout pullback setup, right? We look for that sell going back down. But now as the market starts rolling lower here, I don't want to chase after it down there. I always want to sell high in a bear market. And of course, I'd love to incorporate falling resistance here and look for one more sell, and that would be a trap pattern. Notice how I draw it, right? It traps above that prior swing, right? Again, this is just an illustration because we don't even know what we're going to get tomorrow, right? But this is the type of stuff I'm looking here for tomorrow morning. Again, it's a failure, right, into a pullback, into a trap pattern, selling at resistance, selling at resistance. And again, I cover all of these entry patterns in tremendous detail, including hundreds of real examples from our trade room in that free course in the upper right-hand corner or below the video right now on our trading blog. So that's if the market pulls back here for us. Now, another scenario you want to watch for tomorrow is, what if we start going sideways here, right? What if we start kind of sitting here double bottoms in the chart, right? What if we go sideways here right now? If we start going sideways on the screen, again, I can take the size of that trading range, I can copy and paste it up, and that will give me another level of resistance, right? It's just like a range, or a range and a range, right? You could add a range resistance there, add range support down here. Okay, I want to be a seller, so I'm looking for resistance. I'll add that level of resistance. And again, it's the same pattern. 1, 2, failure, pullback, and back down. Same pattern sequence. Just again, let those buyers try once, let them try twice, and then we'll sell it, right, as those buyers are failing. Now, what is probably very likely here, if these bears have their way, is this thing will probably end up collapsing as we go down. There are ultimately two scenarios I always watch for, and that is, let's just for example here, let's say, for example, this thing starts really aggressively running lower. If it starts aggressively running lower, it's pretty much all hands on deck, and you're probably only going to get a chance to go in for a trap high. These types of free falls that happen after a big run up we saw earlier this week, if it starts to collapse, if somebody pulls the rug underneath from this market, that could easily, right, send this thing tumbling, and we may not get any deep pullbacks. So if we see this thing really grinding lower, what I like to do is I'll mark up these lows, I'll find that high, and just again, look for a trap, look for something above a prior swing, so once it goes up, you can just kind of smack it back down again, right? Get back down there again, right? And it will usually drop right back down, right, to retest that low. The other scenario would be, right, if we get, for example, a relatively minor move lower, right? Keep your eyes out here for a possible channel like that, right? And we'll keep looking to sell off the high of that channel. Again, what I'll be doing is marking up those lows, because you won't be able to find the channel by drawing off the high, right? You'll have to draw that channel off the lows here, and then we'll go up, try to find those hidden levels of resistance so we can then smack that sucker right back down again. So those are some scenarios you want to consider. It'll usually either kind of lazy go lower, right? Or it'll just bam, right, and drop lower. If it drops, whatever it takes, get in, but get in with the trap. If it kind of moseys its way lower here, wait for the pop, right, and then we'll sell back down from there. Now, this is one more scenario, right? Doesn't look likely right now, but it definitely could happen for tomorrow. How would we turn bullish on this? What would a bull market look like? Well, to be very honest with you, if these bulls can get back to retest this high, then I take it all back. Right? We're back to bullish again. If this thing can go back to retest the high, that will be pretty much a fundamental shift in this entire market again. Because right now it looks like we're in pullback mode. It looks like we're in profit-taking mode right now on this Nasdaq. So if they can run this thing back up, the problem is, I was thinking, well, we could look for it like this, right? You could go up, back, and go. I think you're going to see a lot of turbulence in that trade. I think that trade is going to be very difficult to buy. You're going to have a lot of sellers trying to pick that top. I'm going to be waiting for the sell. I just don't think that's going to be a very easy trade. If this was a bullish market, I would say that's a great pattern to look for, but I just don't think it's going to be very pretty. If it does go higher, it's probably going to force those sellers to the sidelines and run higher, right? It'll probably go like this, up and go. Like it'll be a very sharp run higher. If we get back to retest those highs, well, now, of course, we're right back in that same range-bound scenario where now I will definitely try to use that trend line, but now it's going to be a 1, a 2 seller failure and back up. 1, 2 seller failure and back up from there using that trend line. That's one scenario. If we go back to retest the high, we hold and we go, well, hey, keep the party rolling. Find that new channel, mark up that high. Again, I'm talking a lot of strength here through that high. Then look to buy that pullback and keep that party rolling as we go higher. Again, we've got so many different news reports, not the retail sales I'm talking about, but I'm talking about news from China, news from the border wall, the government shutdown. So many things that are kind of left outstanding right now that at any moment that could happen. This thing could just run. right? We could easily make that run higher here. Again, doesn't feel like it's probable, but it's definitely something to keep an eye out for tomorrow. So now we get the buy side and the sell side covered on the Nasdaq. Now all we need is good old Father Time to come in and help us out with a little more price action. Now, talk about price action. Gotta love this gold right now. Over on the gold, the yellow metal. Yellow metal continues to be a very range-bound market right now. And again, last night, if you watched last night's newsletter, the plan was pretty simple last night. We had that range last night, and of course the plan last night was, right, sell the high, 1-2, buy the low, 1-2, right, keep on buying low and selling high. Today we've kind of evolved into a range rather than a triangle. It's actually a rectangle style range, and again, as you know, once I have that trading range, I can copy and paste it up. That creates resistance. I can copy and paste it down, and that creates a level of support. You can see, of course, they ran right into that level of resistance. That big momentum move higher means it's very difficult to sell that. But once you see them try once, right, try twice, that's when you know it's time to get short that market, right? You know, we talked about this earlier, right, on the oil, right, or on the S&P. Because the S&P was collapsing back down, we want to give it time, give it a couple tries before we go trying to fade that move. So gold, definitely a good example of some very strong momentum shifts right now. You got to be careful just fading those moves. And now here we have the same thing, a very strong move down. Now, the bearish momentum tells me I want to be a seller. But here's the problem. This is a range, right? It's a very obvious range at that. Whether you want to call this a triangle or you want to call it a rectangle, whatever you want to call it, it is a range-bound market. So although this momentum is quite bearish, I have a hard time trying to sell this market right now just because of where we are. The amount of the move above the range is pretty much identical to that move below the range. I call that the pendulum swing. And again, we've got major support down here. So not a great spot to be a seller. If we could see some more momentum going through that low, I'd be a whole lot more comfortable being a bear right now on this gold. Again, I am not denying or arguing the fact this market is a hell of a bear move right now. The problem is it's a range. It's not a trending market right now. So what's the best way for me to buy low in a range-bound market with all this bearish momentum? Well, remember when I talked about going lower, right, or going higher, right? We want to go up. It's such a strong move higher. It's the 1, it's the 2, back down. Same thing here, right? Big strong move down. I want to see those sellers try once, try twice, but I really want to see here on this gold with that crown reversal pattern, right? I love those crown reversals, right? Good example back here. Strong move down. Let's get this way so you can see it. I know my ugly mug gets in the way there sometimes for you guys, right? Strong move down. What do we get, right? We get the 1, we get the 2, and see how it traps low right there, right? See how that traps low? That trap is almost a guaranteed paycheck. It really is. It's a very, very reliable setup. We see them all the time. And again, it's effective because that momentum is so strong, right? So same thing here. Look for that same basic pattern there over here, right? Strong move down. Look for those sellers to try once. Wait for them to try twice. And again, I would love to see that little trap low down there, because then what that does is it ropes in those sellers. It makes the sellers get into breakouts. All kinds of bears will get trapped on that move lower, that little lower low, right? That little tiny trap low there. And again, I call this a crown reversal. If you're a client of mine, it's in the advanced section. This is an advanced reversal pattern. You can search for it, right? Crown reversal in the inside the member section at schooloftrade.com. But the bottom line though is, right, it's down, right? It's 1, it's 2, and it's back up. If we can get that trap low, well then hell yeah, right? Now we're talking. Now we've got the 1, now we got the 2, and that trap, which again is almost a guaranteed paycheck, right, in my experience. Now, what would this market look like, right, if it keeps going lower here, right? So how would we trade it if this thing keeps going lower here? Well, of course, we're going to have to wait for that pullback to the moving average, right? We wait for the pullback to the moving average. We look for that sell off the moving average. If they just keep blasting this thing lower here, fine by me. We'll sell it, find that new channel, and we'll look for that move back up now to the high of that channel. Just remember, though, it's got to be a real strong breakdown before we try to sell the low of this range. So it's going to be 1, 2, 3, real strong breakdown, mark up that low, mark up the low of that new channel, and then again, we'll try to look for that channel, right, as we make our way, probably at that point, down to that big round number at 13, right, at 1300. I would imagine that's where those sellers are going to be trying, right, to make this thing run to. For now, though, I want to go 1, 2, back up into that range. If we do see it rally back higher here, same thing, right? 1, 2, back down in. Let's try to stay away from the middle, buy those lows, sell those highs. Pretty easy strategy here on the gold. Just a matter of time here right now before we get some more information. Now, over on the euro right now, looking at the euro, 3 big clues on this euro. One is this bearish momentum. Now, what does bear momentum tell me? It tells me sell at resistance. Now, where could I find some resistance? How about a hidden channel? Now, hidden channels, most people, they find resistance by drawing resistance. I like to personally find resistance by drawing support. Yeah, so drawing support levels off those two and then putting it right up around those highs, and that kind of gives me this sneaky little hidden level of resistance, right? I call these hidden channels. So that hidden channel, again, drawn off the lows here, and keep in mind, if this was to keep going lower, right, that hidden channel would get lower as well, right? So keep that in mind, right, as this market creeps or possibly keeps going lower here. So I like the fact that we've got that hidden channel. That's a great level of resistance. That'll be useful for me. And then, of course, we can't forget about drawing that trend line overhead. That trend line there overhead, just simply connecting those trend lines overhead there, that, of course, creates a level of resistance. So this whole area becomes a very nice selling opportunity. Now, the big clue, though, is that last final clue, that market's objective, right? The market's objective. Now, remember, and we talk about this quite a bit on the newsletter, we've talked about the market's objective many times before. Anytime I see, let's say, for example, a bearish trend, I always like to get back above that moving average, let those buyers, right, try a couple times, and then sell into their stops. Now, with that, where's the objective? The objective is to go back and retest that low. That's the goal. Once we get down to reach that goal, now it's time out. And from there, we got one of two scenarios. Either we bounce and look to do it again, or we go through that low. And if we go through the low, now that low oftentimes becomes resistance on the opposite side that can be used for that next selling opportunity. So that's the clue right now, right? That's the big clue here. If you look left here right now, get this out of the way here for a second, right? If you look left here right now, you'll notice, right? This is a nice big bear move down. Got that big bounce, right? Got that nested 1, 2, back down again. This is exactly the same pattern that we talked about on gold. This one, of course, being short side, right? The one on gold we were talking about was the long side here. But a great example of a bunch of bears, right, who said, nah, I'm going to sell into this. They wait once, they wait twice, and they sell it as it goes lower, right? The problem, though, is where's the goal? Yeah, the goal is to get back down to retest that 12,900 and change. So why am I saying this? Why is that so important? Because I don't want to sell down here. I got to be very careful chasing this market lower until I see some more proof, right? I don't want to go selling down here. I want to sell nice and high. So the key here now is we either want to see the market go up so we can sell it back down, or it's got to go through so I can then grab it on the way over. So what does that look like? How would these things, right? How would these things play out? Again, I've already given you reasons behind this battle zone or this sell zone overhead. So that's my first priority. I want to see the market go up so I can sell it back down. Here's a pattern we haven't talked about lately here tonight, right? How about a two-legged pullback? One leg, two leg, right? Watch that 1, 2 going higher, draw that trend line up, and then I can use that trend line as that level of resistance, and I can sell off of it, right? These are very, very common. 1, 2 going higher, we draw that trend line across, use that trend line now, and you'll notice this sets up for a 1, 2 try failure as well, right? That failure, of course, now That failure, of course, now, let's go orange here, right? That failure comes down, turns into a pullback setup, and we can take that pullback pattern. So again, I call this a two-legged pullback pattern, or the nickname is the 2LP. Then, of course, we have that failure pattern, which we talked about extensively so far tonight, which all of these, by the way, are in that free course in the upper right-hand corner or below the video tonight on the blog. And then, of course, over here, right, for the pullback pattern. Now, you don't want to trade too low here because, again, you've got that major support down there. I don't want to sell into that major support. So that would really be a fantastic opportunity. Another scenario you want to watch here for tomorrow is what if we go sideways here? Right? What if this thing just doesn't pull back, doesn't go lower, but instead what it does is it just kind of double bottoms. Anytime we see double bottoms in a bear market, we know we have a range. Anytime I know I have a range, I know I want to look for that range expansion, right? So I find that range expansion level overhead. Again, we've talked about this before a couple times already. And then we look for that failure pattern. 1, 2, back down in. Let those buyers try once, let them try twice, and we'll sell it with the proper signal going back down into that trading range. Then, what if the market keeps going lower? Right? That's going to be the tricky part, because a lot of times what happens is the market will make that run lower and it will jump right back up. So what you really want to see is you want to see this thing continue here, right? Probably for a couple hours here in the overnight. If we can see this thing continue going lower, now we've got the evidence we need. This market's not going to pop, and we can look for that up, fail, and back down from there. Same basic pattern sequence. Just again, wait for more information here. Wait for some more clarity as we go lower. Don't just try jumping in this thing short just because it breaks a couple ticks below that key level of support. And then, of course, last but not least here, don't forget, we can always turn bullish, right? This could bounce. It could, right? I mean, this could easily come down, bounce, and right back up again. And if it bounces here, it's going to be hunting for that 13,700. Now, it seems completely unrealistic that we're going to see this thing turn bullish tomorrow. But at the same time, though, right, what is it always? An ounce of preparation, right, is a pound of something like that. What is that quote? Give me a comment in the comment section below. Let's see if you're watching this late in the video right now. That'll tell me you're a true price action animal. And it's great to have you here with me, by the way, if you're here this late in this video right now. That tells me you are dedicated to your own success. The bottom line, though, is what would a reversal look like? Right? Seems ridiculous, right? But what would a reversal look like? 1, 2, 3, reversal, right? It's a 1. It's a pullback, a 2, right, and a 3. The key is that jump, right? That jump off that moving average. Once we get that jump, then we buy, right? No. We don't buy high. We buy low. And I know it requires discipline. Remember, discipline is like a muscle. You've got to work it, right? If you don't use it, you're going to lose it. We always practice discipline in our trade room by using a simple set of rules that we follow, by using that checklist. Bottom line, though, is we want to drop that high, draw up that low, find that channel, and that'll give you that sweet spot to buy off of that low. Objective at that point, target at that point, back at that 13,700 for those bulls. Again, I don't think it's going to happen, but hey, I've been wrong before. I might be wrong again tomorrow, and this could easily be, right, a bull market bouncing off that low. But again, be very careful, because if we do get that bounce, people like myself be watching for that failure off the moving average and right back down again. Boy, been a great week so far here on the newsletter. Hope you guys have learned a lot on this video tonight. And hopefully tomorrow, right, we'll earn a lot together as well. Don't forget, we open up every morning, 8 o'clock Eastern time in our trade room. We get a great free trial. If you want to come out and join us as a guest in the trade room, grab that free trial right there on the homepage of that website. I'll email you a free pass. Come out and join me in the trade room here, right, this week or next as a guest. Check out our 3 levels of membership. No matter what stage you are in your trading journey, maybe you're brand new to trading and you want to make sure you set up your office, your computer, software, all the indicators done properly. Our beginner classes are perfect for new traders who want to set up a good, strong foundation. Our intermediate classes teach all the technical analysis, a lot of which I go over here on this nightly newsletter. And of course, the advanced course is second to none. best trade room, best video classes, ongoing support, right? Learn more about the advanced classes, right? And how to join our trade room by learning more on our website. And of course, as always, you're always welcome to call me in the office. I'm old school, I know, no chat bots, right? No chat bots, right? No automated systems here. Call me in the office. I'll be happy to answer all your questions and help you get started as a brand new client. If you don't like the telephone, I understand some folks don't like calling. You can always use that live support. It forwards right to my office anytime I leave the building. Guys and gals, thank you so much for being here. Again, don't forget, no newsletter tomorrow night. I'll be out of the office tomorrow evening after we finish up with our students tomorrow in the trade room. Speaking of trade room, hope to see you there with me, 8 o'clock Eastern time. So be there with me, will you? My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.